And we're back with the market that we started with when we first did technical cheat sheet back in mid-February. That's right, it was Euro USD. I'll tell you what, price isn't too far off what it was back then. It was 107.80 as of doing this video, around 107.60, but we are going to take a look at its key technical indicators, which haven't changed much given the situation, as well as its overview. And when it comes to strategies, that means that there isn't much of a change, though I will say a little bit of an added caution just because of how levels have narrowed a bit, both on daily and weekly time frame. We are going to cover all of that. The interesting part, though, where traders stand, back then, both retail IG client as well as CoT speculators majority buy. This time though, majority short. Going to look at why that's the case and where exactly it was that they shifted from majority buy to majority sell, as well as fundamental considerations in a week where there might be a few things that might keep treasury yields a little bit jumpy, but otherwise not as much to note, especially when it comes to last week's more busier and impacting fundamental items. Let's go and get started then for the weekly time frame. Look at this. All its technical boxes neutral. ADX not in trending territory. You have a positive DMI cross, not far off occurring for on the weekly time frame. But let's not forget, negative DI to positive DI, the proximity. It means that it's very, very easy to go ahead and get a signal that may not necessarily offer much follow through. And because of the fact that markets have been relatively range bound, it means a lot of these key technical indicators are getting huddled close to each other, and that means it's relatively easy to cause a signal. So even if a signal were to occur, I don't think you should pounce on that and immediately cause a technical overview shift. So based on technical boxes in the chart, we're looking at cautious consolidation. And that means that when it comes to conformist strategies, it's the usual. You're selling the first resistance after a significant reversal, buying the first support after a significant reversal. Because it's the weekly time frame, because these are larger levels, a lot of times though there are those that want to entertain fades or lighter reversals. I mentioned before that absent major fundamental moves, you can entertain both fades and reversals. I want to say, though, for fading strategy, you might want to be a little more careful just because levels have narrowed a little bit. We're going to get to that in just a second. We'll look at RSP to first. But when it comes to contrarians, you're looking at breakout strategies. Buy breakouts off the first resistance, sell breakouts off the first support. That's, of course, if you're anticipating that these intra-week controlled moves won't hold. That wasn't the case over the past few months. But hey, you never know. There's also the matter of noting the bear channel. Here's the thing. It's a relatively short-term or mid-term bear channel that we're seeing formulating when it comes to Euro USD, but that does not mean you're necessarily going for contrarians, both buy breakout and sell breakouts. Ideally, what you're going for are sell strategies, because that would be a bear average overview, which means selling the first resistance off the first after a significant reversal, which means that that's a conformist strategy, and selling the first support via breakout, that would be a contrarian. So one apiece if you're looking at it as a bear average. Whereas those of you think that no, this positive technical bias that's building in the short term, you're actually going for the buy strategies, in both one from the conformist and one from the contrarian. What about when it comes to RSP, or relative starting point to the first resistance? The gap, or even first support, the gap was 90. It's narrowed down to 85. So why is it dropped? Because when you have less movement intra-week, and I know there have been exceptions like when you've got the fundamental moves, but generally speaking, if it's relatively controlled, it means that the levels are going to start to narrow, and the gap between the first as well as the SL, or even the second NSL, we're looking at a gap of now 43 ticks, depending of course on what your risk-reward ratio is going to be. What about in the daily time frame? Now here's the thing, the technical boxes are conflicting where they aren't neutral. Price is above all its main short-term daily moving averages, but just beneath, as of doing this video, all its main long-term daily moving averages. Though not going to take much. You take a look at the key technical indicators on the chart. Not going to take much to flicker the MA long box from red to neutral. Won't even take much, by the way, to tilt it to green as well thereafter. But the thing is, you look at over here. We did have a positive DMI cross recently, but look at the proximity between the negative DI and the positive DI. And you look back in the past, there have been cases where it hasn't offered that much follow through, and as a result, you want to take it with a grain of salt. There's no denying positive technical buys building in the shorter term. There are strategies that you can entertain accordingly. But if we are looking at an overview for the time being, we are looking at cautious consolidation once again. Same review it was before, and in fact, it's been that way for quite some time. Even on the pullback, it was generally one of caution. It wasn't one where you can just say, okay, here we go, bear average or bear trend or even a stalling bear. But I want to say far more cautious when it comes to entertaining fades as well as light reversals. So on a weekly where you got larger levels, even if they have narrowed, you might say, okay, I want to go for a light reversal. But when it comes to a daily time frame where you're looking at shorter term levels, that just means that you need to be that much more cautious, especially if positive technical buys can persist, and that can tilt the final MA long price with respect to the long-term daily moving averages from red to neutral or even something bullish. And that means that contrarians are going to be at the ready in this regard. First off, if you have any fundamental releases, obviously you're expecting therefore that shorter term levels probably aren't going to hold. Second of all, if you're already reaching, if prices already reached from the European session, the leftover moves, already reaching the US session, and you're already at the first resistance or first support, you might want to be a little more cautious in that case, especially if you don't think price is going to settle at these levels. Because, yeah, the overview has been cautious consolidation over the past few months, but if you think about it, there have been these little mini trend moves, lower or higher. The problem is getting those moves, absent a fundamental decision, within the same session. Because if we're looking at daily levels, then you're talking intraday. Now, there is the matter of saying, okay, fine, I want to sell, for example, let's say you think that your price is going to trend lower. You want to sell the first support via breakout, but I'm not expecting follow through today. I'm expecting follow through tomorrow or the day after because I'm going with a mini trend move. Or because we're looking at some positive technical bias as of late, you might think to yourself, okay, I'm going to buy off the first resistance, but I'm going to have to wait a session or two. It's a bit tricky, of course, when you've got positive technical bias and you're at close to the upper end of a bear channel. It's a very tricky situation, but that's the idea behind contrarians going for breakouts, where they're probably not anticipating much follow through. Again, if there aren't any key fundamental events on that day, they may not be anticipating follow through, but at the very least, they're hoping that they might get it the next day or the day after. And looking at levels, by the way, it narrowed for the weekly from 90 to 85. For the daily, this is the RSP, by the way, for the start of this week on Monday, so 107.63. I don't want to say you just want to plug and chug for the next day when you're looking at this on Tuesday or Wednesday. We do have IG's daily market report released Monday through Friday, where it gives the daily levels. Everything is going to be updated with the RSP as well, so you don't have to always plug and chug. And the other thing I want to add is that, yeah, it's dropped from Monday from 37 to 35. But it can rise during the week on what are usually more volatile days. So Thursday, usually there's a bit, on average, Tuesdays and Thursdays have a bit more volatility, for example. So that means that you might want to take that up to not just 40, but maybe above 40 as well. So that's when it comes to technicals. This is sentiment as of February 12th, 2024, when I did the first technical cheat sheet. Both IG clients as well as CoT speculators in majority buy territory, not too far off the middle when it comes to IG clients. This is where they are at the start of this week when it comes to IG clients. They shifted from a majority buy 56%, that's the inner circle at the start of last week, to the outer circle, which is the start of this week, to a majority sell 56%. So they've shifted from majority buy to majority short. CoT speculators, they've been majority buy since September of 2022. They shifted a couple weeks back to slight sell 51%, very close to the middle, so it's not like they really pushed it into sell territory, but they are majority short territory. They've stayed in majority short territory. You had a slight drop in longs, a larger change in shorts. It's kept in percentage rounding, it's still at 51%. So I want to say, very close to the middle, but a very, very slight sell. How did they get there? Well, I'm going to go plot sentiment onto the chart. Green dotted for CoT speculators, blue dotted for IG clients. It's as percent long looking at the left axis. So the price chart you're looking over here, 106, 107, 108, so on and so forth. The left axis is as percent long. So down here, when you see the blue dotted line over here around, around 42%. Up here, you got CoT speculators around 76%. I'm going to follow this red dotted line, by the way, that's the 50-50. Whenever the dotted line's above, they're majority buy. Whenever you see the dotted line, blue or green, go below, it means that they are majority short during that period of time. Let's go ahead and follow the green dotted line, though. Price starts to drop. You see their majority buys. They're above the red dotted line. The green dotted line, you see them start to unwind. These are the momentum guys getting out. It holds over here, starts to go up. You see them slowly start to build it again, but not as high sentiment as you had over here where they're in extreme buy territory. Price struggles a little bit, starts to go down. Once again, start to take it down. Price goes up, going with the momentum. But every single time making a lower peak. Not just price, but sentiment as well. And then finally, you had this move down over here where they finally felt like they've had enough and they shifted into slight sell territory. Now, these gains right over here, you're thinking, well, hold on, we have gains. Doesn't that mean that maybe they might shift it back to majority buy? It's very possible. And the reason why is because the gains last week, primarily from after the dovish FOMC hold onwards and then the weaker NFP data, the CoT report's released on Friday, so it's released last Friday, but positioning is as of last Tuesday, before we had these gains. So we are going to have to wait and see what the results are going to be from the CoT report this Friday. The numbers will be reflected in IG's weekly sentiment report, which is released every Monday, and you can see, therefore, what the update is in terms of whether or not they've shifted or whether or not some of the momentum guys might get back in and say, okay, you know what, maybe we're in for at least even if it's a lower high, maybe we're in for some further gains, and maybe they might shift back to either the middle or even to majority buy because it doesn't take much just because they're so close to the middle. What about when it comes to IG clients? I'm actually going to zoom into the daily time frame to get a better closer look of what's happening. Blue dotted line is what we're going to be looking at here. Again, you still got the red dotted line here, the 50-50, but price, I'll just take it from here. For example, price moves up and you can see the blue dotted line come down, longs get out, shorts initiate. Very much in a range trading situation, opposite what we see with CoT speculators on momentum. And I got to say, it's kind of worked for them quite well because of the fact that the market has been relatively range bound. Even when it moves away from the average, it eventually has been coming back. So you see over here, it dropped all the way here. You see the buys jump into heavy buy territory, not far off extreme buy. It's around 74, 78 is usually seen as extreme buy territory. And then you see price recover. They managed to get out. There is the matter of longs and shorts getting out, taking profit a little too quickly. That's still there. And then afterwards, you had this move over here. So they started off their majority buy territory, as I mentioned, at the start of last week. And then afterwards, you had the gains. You had to pull back a little bit. It went a little bit higher. And then afterwards, you had the successive price gains. Longs get out, shorts initiate. And that's the reason why now they are in majority short territory. When it comes to fundamental considerations, look, you had that FOMC dovish hold. There are a few key things. It was the QT reduction that was a bit larger than anticipated. You had the whole, coming to the, if labor market weakens while inflation is still sticky, as well as ruling out a rate hike. And then after you had a weak data prior to the meeting with the ISM manufacturing, as well as on Friday, ISM services as well falling into contraction. And you look at some of their components of it, didn't look too good, as well as non-farm payrolls, which came out lighter than anticipated. It did help yields drop. When it comes to this week, what have we got? We've got some treasury auctions. Normally, I wouldn't be bringing this up if this was years ago, but the fact is that when you got these sizable deficits, it's a matter of all the supply coming in on the treasury front. Can demand, is it going to keep up with supply? And that means that people have been a bit more picky when looking at these treasury auctions. You got the 3, the 10, and the 30, that are expected to be the notable ones this week. Otherwise, you got plenty of FOMC members speaking. And on Friday, you got the preliminary readings out of U of M for consumer sentiment and inflation expectations. Otherwise, so not that much to digest. CPI is going to be for next week. And FOMC, at the time that we did this video in February, the expectation was we'd have a rate cut in May. Prior to that, after the whole December Fed pivot party, the expectation wasn't that healthy a majority, but the expectation was we get a rate cut out of the Fed in March. March came and went, nothing happened. The May meeting finished. It was also a hold. First rate cut priced in with slightly better odds for September and only 2 for 24 compared to the start of the year where it was 6, and at times we were talking about even 7 rate cuts. So what about when it comes to the Eurozone? You already got services PMI and producer prices. You got retail sales and the ECB's minutes next, depending on when you're watching this. Of course, one of them might have already passed. But the ECB is still expected to cut in June. And for now, market pricing, courtesy of LSEG, that we're looking at 3 for 24. So before, it was the Fed cutting first, and then the ECB cutting next, and the Fed would have more cuts. Now the narrative is that no, the Fed's is going to cut later, and is not going to have as many cuts compared to the ECB. Of course, plenty of data between now and then that can tilt and change and shift those market pricing. So that's about it. I do hope you enjoyed this video. Good luck out there.